Let's get into now, of course, what we've been seeing in terms of property trends. There's also been a lot of argy-bargy over whether or not the RBA or the government is smashing the economy. And here to provide why he thinks Michelle Bullock is right to hold her ground is Anthony Landahl, Managing Director and Mortgage Broker at Equilibria Finance. Hi, Anthony. I mean, she's really not taking any prisoners, is she? She's steadfast in the fact that inflation is still too high.
Yeah, g'day, Juliet. Great to be here. Yeah, she is steadfast in that view, and I think rightly so. The RBA absolutely needs to maintain its independence from the government, and the RBA has made it very clear what its target range is. Our cash rate at the moment is 4.35%. We went a bit slower in terms of when we raised the cash rate than a lot of other international economies, and we've still got inflation around 3.8%. We've got unemployment at 4.2%. These are still out of the RBA's clear target. So at the end of the day, Michelle Bullock is right to hold her ground. The RBA governance, the RBA decision-making has to remain independent from any government pressures and decision-making. And Michelle Bullock's right to stand her ground and also talk of potentially more rate rises to come if that demands it.
So this coming amidst the backdrop of the Fed expected to cut from next week. Well, we know they're going to. It's just a question of whether it's going to be 25 or 50 basis points. The ECB cut this week. We've been looking at quite a lot of momentum coming through from other developing nations cutting. Where does that put Australia as we see our interest rates remain at these levels likely until next year?
Yeah, the first thing that needs is the perspective of where the international cash rates have started. So all of those international cash rates, the US is at 5.5%, the UK, Canada, New Zealand, their cash rates are all above ours or have been above ours before they started any cuts, firstly. Secondly, all of those countries now have inflation back in target and unemployment either in and around target or heading to target. So all of those countries have waited until they're within their targets, and also their cash rate did start higher. We still have the US at 5.5%. The UK is at 5.25%. New Zealand just cut theirs to 5.25% from 5.5%. So their cash rates did go a lot higher than ours. And the result of that is they've actually brought inflation back into target and unemployment is back where they want it. So that's encouraging in the sense if we can get inflation under control, the central banks are willing to cut cash rates, but they have started higher and they've got their targets back in range, and now they're getting the rate cuts.
All right, what does all of this mean for the property market? Now, I think from what I read, this is meant to be one of the busiest auction weeks this weekend. We're kicking into spring. And then, funnily enough, I read in 2 weeks' time it'll be quite slow because of the AFL Grand Final. What are you seeing in terms of momentum in the property market?
Yeah, you're spot on there. We're nationally we're seeing generally this time of year we see listings up about 20 odd percent. This week we're seeing auction rates up about 16%, in Sydney up about 18% in terms of number of auctions coming up, and that trend looks consistent over the next couple of weeks. There is a bit of a dip, particularly in Victoria over the AFL Grand Final with the long weekend and everyone focused on the footy, but we are seeing those other listings coming onto the market. We're seeing clearance rates pretty much nationally over the 70% mark, which is great. Sydney's weekend we've got coming up this weekend is the most listings, the most auctions we've had since Easter of this year. So that's encouraging. There's stock coming onto the market in a really, really challenging time for a lot of households around affordability. We're starting to see the market ease a little bit in terms of prices. We've had 19 months of consecutive growth, but that rate of growth has slowed. So more stock, slowing rate of growth is presenting some opportunities for buyers.
Yeah, it looks like it's a buyer's market at the moment. Anthony, is it broad-based across the country though? Because there's been sort of fewer listings in the likes of, say, Tasmania.
Yeah, it's not. We've very much had. It's an interesting market. The growth in the market's been driven by Perth, Brisbane and Adelaide. Sydney's been fairly subdued recently, and we're actually getting negative growth in Hobart, Melbourne, Tasmania and Darwin. So the rates of growth have very much been two-speed. and the stock coming on the market is generally up in most areas. But again, we're seeing probably a lot of more stock coming on in Sydney. Victoria is a little bit more subdued, as Tasmania is. Perth and Brisbane and Adelaide still are having a bit of a shortage of supply, albeit stock is up a little bit in spring.
So does this all then provide some positivity potentially for the rental market as well? If you're seeing more supply come on, perhaps we've seen the peak of those high rents.
Yeah, it's a good observation. We have seen the peak in rents. We had vacancy rates under 1% nationally, probably 3 to 6 months ago, but we are seeing an easing in rentals in terms of stock coming on the market, in terms of that demand for rent, and ultimately in terms of the increase in prices for rent. So good news for renters is that market has eased a little bit, and that's nationally. We're seeing that rental growth slowing. And that's a combination of some investors are coming back into the market. The heat's come out of those prices going up, and there is more rental stock coming onto the market, which is good for those people who are renting.
And Anthony, just going back to the governor, because I think she made a really interesting point, I believe it was last week, saying that she knows that a lot of Australians are hurting with these higher rates, but as we alluded to earlier, she thinks it's worse to not try and control inflation. But she said something like the fact that 5% of Aussies might be forced to sell their homes. Is that sort of the trends that you're seeing in terms of potential forced sales?
Yeah, we are seeing a bit of a trend. I guess the trend we're seeing is initially we have got some people looking at whether they sell off an investment property if they haven't got the cash to hold the investment property and try and maintain their home. People who are in some sort of mortgage stress are being encouraged to talk to their bank. The banks are offering some provisions around moving to interest only, or some repayment holidays and stuff like that. Ultimately, the banks don't want to be selling houses. There are the odd occasions where affordability is really biting and people have to consider downsizing, or selling their home and moving into something maybe more affordable. And that's not an easy conversation. That's challenging, but very much is in the minority. We're not seeing a lot of stock coming on the market because of that factor, but we are seeing other factors at play where maybe people are selling an investment property or having conversations with their banks or their brokers about some short-term relief to manage their cash flow.